Debits, credits, APIC, DTAs. Does it sound like I'm speaking Greek to you? In this video, I'm going to try to demystify the journal entries that we use to record equity award transactions. Let's start with some basics, including what are journal entries? So every transaction that has a financial impact on your company has to be recorded in your company's general ledger. We use journal entries to do that. And there are two types of journal entries. They can either be credits or debits. Now, this leads to a second question, which is, what exactly is a general ledger? So a general ledger is the repository for all the transactions that have a financial impact on your company. It's really the source for all the information that you report in your financial statements. And your general ledger will be divided up into different accounts, probably a pretty complicated chart of accounts. A couple accounts that you might be familiar with are compensation expense and common stock. All of your accounts are divided up into will probably fall under 5 categories. There are asset accounts, which are things the company owns, liability accounts, which is debt the company has taken on, equity, which is the ownership of the company, and revenue and expenses. Now, let's also talk about the two different types of journal entries, debits and credits, because you probably come to this video with a preconceived idea about what those two words mean. And you might not be always right about that. There are two types of accounts. Accounts can either be credit accounts or debit accounts. In a credit account, credits will increase the account balance and debits will decrease the account balance. That's probably what you would expect. In a debit account, the opposite is true. Credits will actually decrease the account balance and debits will increase the account balance. That's probably not what you would expect. I don't think you really need to understand all the technical ins and outs of credit versus debit balances and when credits and debits are increases versus decreases. I think the important takeaway here is that as we go through the different journal entries, remember that a debit can sometimes be an increase and a credit can sometimes be a decrease. All right, let's talk about some of the journal entries that we use for equity awards, starting with recording expense for the awards. Obviously, that expense has a financial impact on the company, so we're going to need to record it in our general ledger using some journal entries. The first journal entry we'll use will be a debit to compensation expense. Now, compensation expense is one of those debit balance accounts, so that debit actually increases our compensation expense. Another thing to know about journal entries is that there will always be at least one, and sometimes more than one, offsetting entry. You never have just one entry at a time. So in this case, our offsetting entry will be a credit to additional paid in capital. Additional paid in capital is any amount that's paid for our common stock that exceeds the par value of the stock. And usually we think of those payments as being cash, but in this case, the payment is the services that the employee is performing for the company. And those services are valued based on the expense that we're recognizing for the award. If the award is a non-qualified award, we also will be anticipating a tax deduction eventually. And we'll need a couple journal entries to record that anticipated tax deduction. We'll have a credit to our deferred tax asset account and a debit to our deferred tax benefit account. Another time when we are recording journal entries for awards is when we are settling the award, when we're paying out the stock underlying the award. Now, here, things get a little complicated. The journal entries can really vary depending upon the specific facts and circumstances. My sample journal entries here assume that we're issuing new shares for the award. If we were issuing treasury shares, the journal entries would be a little bit different. But if we're issuing new shares, then we'll have a credit to common stock. We'll also need an offsetting entry, and that offsetting entry will vary depending upon whether we're getting a cash payment for the shares or not. So if we're not getting cash payment, for example, if this is an RSU award, then our offsetting entry is just going to be a debit to additional paid-in capital. On the other hand, if we are getting a payment, then we'll have two offsetting entries. The first one will be a debit to cash, which represents the cash that we are receiving. And then the second entry will be a credit to APIC, which is the amount by which that cash exceeds the par value of our stock. Now, here again, if this is a non-qualified arrangement, we also need to account for the tax deduction. At this point, we're actually going to be able to recognize the tax deduction that we estimated earlier. So the first thing we have to do is write off that earlier estimate that we recorded. And we'll have two entries to do that. We will debit deferred tax expense, which writes off that deferred tax benefit. And then we will credit our deferred tax asset account, which writes off that DTA. We are also now actually realizing the tax benefit. Like, we're actually reducing the amount of taxes we pay in this financial period. So we'll also have a debit to taxes payable, and our offsetting entry to that will be a credit to current tax expense. We're reducing our tax expense as well. Now, this assumes that the tax deduction that we're getting exceeds that deferred tax asset that we originally recorded for the award. If it doesn't, then the journal entries would be a little bit different. Hey, I said it was complicated. There is so much more to know about this topic than what I can cover in just a short video. The NASPP has a great article called Journal Entries for Stock Compensation that goes into a lot more detail on this topic. The article actually goes through all the different types of rewards that we see commonly, like from stock options to restricted stock in units to employee stock purchase plans, and reviews the journal entries that would be used at every step in the life of those awards. It is just a great source of information. I'm not aware of any other resource like this, and I really encourage you to check it out. We'll include a link in the show notes. I hope you enjoyed my video today. If you did, please subscribe to our YouTube channel. That way you're notified of when we post new videos, and it also really helps us out. Thanks for watching.